How does cryptocurrency work? A cryptographic money is a mode of trade that is computerized, encoded and decentralized. In contrast to the US dollar or the euro, there is no focal power that oversees and keeps up with the worth of a cryptographic money. All things being equal, these assignments are extensively appropriated among a digital money's clients by means of the web. You can utilize crypto to purchase normal labor and products, albeit the vast majority put resources into digital forms of money as they would in different resources, similar to stocks or valuable metals. While cryptographic money is a novel and energizing resource class, buying it tends to be dangerous as you should take on a decent measure of examination to completely see how every framework functions. Best Crypto Exchanges 2022. We've sifted through the main trade contributions and reams of information to decide the best crypto trades. Find out more. Bitcoin was the primary digital money, first laid out on a basic level by Satoshi Nakamoto in a 2008 paper named Bitcoin, a peer-to-peer electronic cash system. Nakamoto portrayed the task as an electronic installment framework in light of cryptographic evidence rather than trust. That cryptographic verification comes as exchanges that are checked and recorded on a blockchain. What is a blockchain? A blockchain is an open, disseminated record that records exchanges in code. By and by, it's similar to a checkbook that is dispersed across innumerable PCs all over the planet. Exchanges are recorded in blocks that are then connected together on a chain of past cryptographic money exchanges. Envision a book where you record all that you burn through cash on every day, says Bachi Okoro, CEO and prime supporter of African digital currency trade Quadax. Each page is like a square, and the whole book, a gathering of pages, is a blockchain. With a blockchain, every individual who utilizes a cryptographic money has their own duplicate of this book to make a brought-together exchange record. Programming logs each new exchange as it occurs, and each duplicate of the blockchain is refreshed at the same time with the new data, keeping all records indistinguishable and precise. To forestall extortion, every exchange is really looked at utilizing one of two principal approval procedures: evidence of work or verification of stake. Verification of work versus proof of stake. Verification of work and confirmation of stake are two distinct approval procedures used to check exchanges before they're added to a blockchain that reward verifiers with more digital money. Cryptographic forms of money ordinarily utilize either verification of work or confirmation of stake to check exchanges. Verification of work. Verification of work is a technique for confirming exchanges on a blockchain in which a calculation gives a numerical issue that PCs competition to settle, says Simon Oxenham, online media supervisor at xcoins.com. Each partaking PC, frequently alluded to as a excavator, tackles a numerical riddle that checks a gathering of exchanges alluded to as a square, then, at that point, adds them to the blockchain ledger. The principal PC to do as such effectively is compensated with a limited quantity of digital currency for its endeavors. This competition to tackle blockchain riddles can require an extraordinary measure of PC power and power. Practically speaking, that implies the diggers may scarcely equal the initial investment with the crypto they get for approving exchanges, in the wake of thinking about the expenses of force and registering assets. Evidence of stake. To decrease how much power important to check exchanges, Some cryptographic forms of money utilize a proof-of-stake confirmation technique. With proof-of-stake, the quantity of exchanges every individual can check is restricted by how much cryptographic money they're willing to stake or briefly lock up in a shared protected for the opportunity to take an interest simultaneously. It's practically similar to bank security, says Okuro. Every individual who stakes crypto is qualified to confirm exchanges. However, the chances you'll be picked to do is such increment with the sum you front. Since evidence of stake eliminates energy escalated condition tackling, it's considerably more productive than confirmation of work, taking into account quicker check affirmation times for exchanges, says Anton Altement, CEO of Awesome Finance. In the event that a stake proprietor, at times called a validator, is picked to approve another gathering of exchanges, they'll be compensated with digital currency, possibly in how much total exchange charges from the square of exchanges. To put misrepresentation down, assuming you are picked and confirm invalid exchanges, you relinquish a piece of what you marked. The role of consensus in crypto. Both evidence of stake and verification of work depend on agreement instruments to confirm exchanges. This implies while each utilizations individual clients to confirm exchanges, each confirmed exchange should be checked and endorsed by most of record holders. For instance, a programmer couldn't adjust the blockchain record except if they effectively got basically 51% of the records to match their deceitful adaptation. How much assets important to do this makes extortion impossible. How might you mine cryptocurrency? Mining is the way new units of cryptographic money are delivered into the world, by and large in return for approving exchanges. While it's hypothetically feasible for the normal individual to mine cryptographic money, it's inexorably troublesome in confirmation of work frameworks, as Bitcoin. As the Bitcoin network develops, it gets more muddled, and seriously handling power is required, says Spencer Montgomery, author of Unter Crypto Consulting. The normal shopper used to have the option to do this, yet presently it's simply excessively costly. There are an excessive number of individuals who have improved their gear and innovation to outcompete. Furthermore, recall, proof-of-work cryptographic forms of money require tremendous measures of energy to mine. It's assessed that 0.21% of all of the world's power goes to controlling Bitcoin ranches. That is generally a similar measure of force Switzerland utilizes in a year. It's assessed most Bitcoin excavators wind up utilizing 60% to 80% of what they acquire from mining to take care of power costs. While it's unrealistic for the normal individual to procure crypto by mining in a proof-of-work framework, the evidence of stake model requires less in the method of powerful registering as validators are picked indiscriminately founded on the sum they stake. It does, notwithstanding, necessitate that you currently own a cryptographic money to take an interest. On the off chance that you have no crypto, you don't have anything to stake. How might you use cryptocurrency? You can utilize digital currency to make buys, yet it's anything but a type of installment with standard acknowledgement yet. A small bunch of online retailers like Overstock.com acknowledge Bitcoin, yet it's a long way from the standard. Until crypto is all the more generally acknowledged, you can work around current restrictions by trading digital money for gift vouchers. At eGifter, for example, you can utilize Bitcoin to purchase gift vouchers for Dunkin' Donuts, Target, Apple and select different retailers and eateries. You may likewise have the option to stack digital currency to a charge card to make buys. In the US, you can pursue the BitPay card, a check card that changes over crypto resources into dollars for procurement. Yet there are charges required to arrange the card and use it for ATM withdrawals, for instance. You may likewise utilize crypto as an elective speculation choice outside of stocks and bonds. The most popular crypto, Bitcoin, is a solid, decentralized cash that has turned into a store of significant worth like gold, says David Zeiler, a digital currency master and partner proofreader for monetary news site Money Morning. Certain individuals even allude to it as advance gold. Instructions to use cryptocurrency for secure purchases. Utilizing crypto to safely make buys relies upon what you're attempting to purchase. Assuming you might want to spend cryptographic money at a retailer that doesn't acknowledge it straightforwardly, you can utilize a digital currency charge card, as BitPay, in the US. Assuming you're attempting to pay an individual or retailer who acknowledges cryptographic money, you'll require a digital currency wallet, which is a product program that communicates with the blockchain and permits clients to send and get cryptographic money. To move cash from your wallet, you can filter the QR code of your beneficiary or enter their wallet address physically. A few administrations make this more straightforward by permitting you to enter a telephone number or select a contact from your telephone. Remember that exchanges are not quick, as they should be approved utilizing evidence of work or confirmation of stake. Contingent upon the cryptographic money, this might take between 10 minutes and 2 hours. This slack time, however, is important for what makes crypto exchanges secure. An agitator attempting to adjust an exchange will not have the appropriate programming keys, and that implies the organization will dismiss the exchange. The organization likewise polices and forestalls twofold spending, Zeiler says. Step-by-step instructions to invest in cryptocurrency. Cryptographic money can be bought on shared organizations and digital currency trades, like Coinbase and Bitfinex. Look out for expenses, however, as a portion of these trades charge what can be restrictively significant expenses on little crypto buys. Coinbase, for example, charges an expense of 0.5% of your buy in addition to a level charge of 99 cents to $2.99 contingent upon the size of your exchange. A few business stages like Robinhood, Webull and eToro let you put resources into crypto. They offer the capacity to exchange the absolute most well-known cryptographic forms of money, including Bitcoin, Ethereum and Dogecoin. However, they may likewise have restrictions, including the failure to move crypto buys off their foundation.